Hello, Warriors. How's everyone doing today? Who's ready to have a great week? Give me a Y if you're in the main chat room. I'd also like to say hello to the whole team. TradeGate Hub's team is unbelievable. Okay, we have a lot of talent in here. If you're watching us on YouTube, you're not getting everything that it's being posted by Elliman was on this morning with a great presentation. And you guys have to check out Mike Venezia. Mike made a great call when the market was under pressure last week. A lot of individual issues that he recommended when the market was under pressure have rebounded significantly. And if you're not in TradeGate Hub, you're missing a lot. So here's my 2 cents on what I think is going on. You know, I do a lot of my planning for trades over the weekend. And I was looking at things over the weekend and I kept looking and I kept looking. And there were so many things that looked either or to me. And, you know, once in a while, you're not going to find compelling setups. And it's very difficult to just sit on your hands and wait for things to clear up. In fact, the only trade that I have working right now is right here in front of you, and it's WTI. And you know, the dollar is weaker and crude is recovering, but this break that we had last week, I'm thinking it's significant. When you look at last week's candle, it was a pretty negative candle. This week the off number is 65.46. Okay, so that's still a buck above where it is. And when you look at the daily, there's a chance that this was a failing rally and this pullback here, this first initial break. Now we're getting a bounce. We're about 50% to 61.8 back, and I'm playing for a move back under the lows that we had from last week's candle. In fact, if you look at this whole range from about 60.50 to the high up here was 67. So, you know, you're talking about $6.50 from 60.50 gives you 54. So when you look at this 54 range, it's, you know, you could see some moving averages coming in here, right here on the weekly, 53.70, 54. So I'm looking for a pretty good sell-off in crude, especially once the dollar turns. So that's the other key. You know, it's my belief that the dollar is the fulcrum of the wheel that all other instruments spin around. So everyone knows that's been, you know, listening to me over the past several weeks that I think it's a pretty done deal that we're going to get new lows here. 89.20 was the low that we had in January. I do think it's going to be taken out. A lot of people talking about 88 and a half. In fact, so many people talking about 88 and a half. I've observed over the years of when everyone's looking for one number, it either doesn't achieve it or when it gets to it, it's not as significant as everyone thought it was going to be. So, you know, we'll see if 88.50, which happens to be, you have to go the monthly to see why technicians are saying that it could be very important. So here's your monthly chart of the dollar. We're breaking out the telescope right here. So here's your 88 level right here that we're, you know, a lot of people are talking about this being major support in the dollar. If we take it out, you know, who knows? We could trade 84, we could trade 83. It's my contention, though, before we have this big breakdown, and you could call this a huge range, right? 88 and a half to 103. You're talking 18 from 88 and a half. It's going to give you a $70, 70 Dixie all the way down here on a breakdown under the support level. What markets do sometimes is they'll take out a significant low and clean out all the bears, get some type of panic. You know, maybe we trade 87 and then we're back above 88 and a half. But I'm looking at this as, you know, a lot of people are looking to get short the dollar, looking for a massive collapse. I think there's one more bear market rally once we do get a low in here in the dollar that could take the Dixie back to 95. But I don't think we're there yet. I don't fade the dollar when the euro is outperforming cable, which is what's happening. And something else I want to talk about, when you look at markets, maybe ask yourself, where are the stops? Okay. So where do you think the stops are in euro? Anyone want to take a shot here? Well, I'd say that this little double top here, there are buy stops above it. And back under this moving average, there are sell stops above it. Sell stops underneath it right here, 21 and a half. So right here it's pretty neutral. I think we're going to take these highs out. Maybe the euro trades as high as 124. But I can't just reach for it here except for scalps. Sometimes markets are in a position where you feel a little late to go with the trend, and it's a little too early to fade the trend. And that's kind of the way I'm looking at things here this morning. When it comes to the dollars buy stops, I agree with you. They're above the high, and I think that they're going to take them out. And what's important about this is I do believe that when the dollar bottoms and we get a rally in the dollar, that we're going to have a pretty good correction and pretty good risk off situation in the market. A weaker dollar is stimulative for risk on for almost everything, not just commodities, equities, across the board. So if you trade markets at all and you're not paying attention to the dollar, you're being amiss, because you have to pay attention to any type of turn. In fact, we started to get a little turn in the dollar, just a little bounce when the euro was under pressure Friday. And if you notice, everything came off. The S&Ps came off. Here we go. Came off. We had this right here. Gold came off, but it was just temporary because the dollar, it was just a little bounce Friday. So we had the gold come off like this. So just it's kind of a foreshadowing and maybe a shot across the bow, um, that when the dollar turns, really it's all one market, and a weak dollar propels everything with nominal gains, and then whatever inherent strength the instrument has on its own. Weaker dollar means higher prices across the board. Okay, so it's all really one market, and as long as the dollar's under pressure, most things are appreciating. And when the dollar, if, when, and most people feel never, and I could make a case for the dollar being 30% lower in the next couple years, but I don't put on positions looking for what's going to happen in a couple years. I think we're much closer to a dollar bottom than we are to a dollar collapse. And that's my view. So taking a look at the euro looks like we're going to head up. Um, Still looking pretty good. I see it doing nothing wrong. We're just consolidating this recent gain. And on this 4-hour chart, I do believe that we're going to head up 23, 24 in the next week or so. And for those of you that are a little bit more esoteric, something I pay attention to, and I was talking about strength in the market into month's end. I posted it in TradeGate Hub. I've talked about it during the live streams, and here we are near the end of the month. But there's also things that I pay attention to because I'm a lunatic, not a lunatic, although some people that know me well might say that. I'm a lunatic. So we have a total lunar eclipse on Wednesday on the full moon, and I know you guys think I'm probably should be committed and taken to, some type of sanitarium, that I would follow things like that, but you'd be amazed. And people that have listened to me over the years start looking up nowadays, and they pay attention to some of these eclipses and change of seasons. And I was thinking about the stock market, what a great spring it's had, what a great April, decent May. And spring we still have another 3, 4 weeks left till we get to the summer solstice. And I'm thinking that it's green for everything, most likely until that time frame in June. So maybe by then the dollar's putting in um, some type of bottom for a vicious bear market rally. When it comes to the S&Ps, I could make a case for over 4,300 just looking at this. Okay, here's the S&P. So here's the correction that we had, that I was long SQQ because, NASDAQ was much weaker. NASDAQ actually is starting to outperform, and that's something else Mike talked about on the rotation. NASDAQ's up 1.2% with the S&Ps up a 0.5%. But I just want to show you how I come up with some of these targets. So you have this horizontal resistance that, has been, you look left, and it's been pretty important here at this 85 level. So on a breakout, and a breakout is at least 2 closes above this level, if you could add and subtract, you could trade. So from here at 40, call it 40.34, that's 150 handles to 41.85, and you tack on 150 handles above 41.85, and that gives you 43.30. So, I still believe we're going to see a handle above 4,300 before this correction that I've been talking about for the last 10 years occurs. And, I'm not afraid to play both sides of the market, but it looks like we could be about to enter a blow off stage with the catalyst being the dollar weakness continuing. One thing I have to say about the dollar right now, everyone's on the same side of the ship, which makes me nervous, why I have a hard time wanting to get bearish a dollar. You have about 13% bulls in the dollar. That means only 13% of people trading the dollar and the other currencies within the dollar index, with the euro being the major portion of it, um, are going to continue to work it. But 13% bulls is a pretty crowded trade. So the bearish dollar trade, I think, is in its last throes before we get this type of reaction and a dollar rally. So that's really what I'm going to pay attention to, is when the dollar takes out that low or is challenging that low. 89.20 is only about 60 points away from here. Something else I'm looking at that's not here yet, talked about last week, and it's Canada. Okay, so we all know there's a lot of people, as bearish a dollar people are, they're even more bullish Canada. Canada's begun to taper. Um, Oil prices have been elevated and rallying. So, there's a lot of bearishness in USD CAD, which means bullishness for the Canadian dollar. And maybe coincidentally, we're going to get a low in both the dollar and the Canadian, a little bit under 20. I have a potential three drive to a bottom happening here, and this wedge line is going to come in about 80 lower, 80 pips lower, around 1972. You get the panic under the big round number at 120, and as you can see from the monthly, not that monthly, but from this monthly, that this 120 level is big. All right, and we're breaking it now. So some moving averages on the monthly come in much lower. I'm thinking we're getting much closer to a bottom, again, just for a bear market rally, but a bear market rally that could take you back to 132 or so. Here's the weekly in Canada. And it's also not going to take that much for a 2-week reversal. If by Friday we're trading back over 121.31, which is, about 70 pips from here, you're going to have a 2-week reversal. So this was the big breakdown at 130. And if you look at the whole move from here in Canada, from 146, call it 2,600. Even a 38% correction is going to take you back to the breakdown. All right. Call it 2,600 pips. 38% is going to be 1,000 pips and could take you right back to this breakdown. So this is something that I'm preparing my mentees and preparing myself mentally for. It's always good to prepare yourself mentally before the trade so that you're not analyzing the trade when it's there. That's the time for execution. So this is something that I'm going to be paying attention to in the days and weeks ahead, which coincides with a blow off top in the S&Ps and some type of low being put in the dollar within the next 100 pips or so. So again, uh, there's not a lot that I want to do today. And we have to have the discipline that if there's nothing to do, and when I find myself saying, oh, I got to find something to do, I have to find a trade, and I start scanning everywhere and I go, well, yeah, this could be bullish for another move, but it also could break down uh, from here. It to me, it means do nothing. When you see markets that look like they could go either way without a preponderance of technical evidence, it's like going into court without any evidence and trying to defend or prosecute a case. You need evidence, and I came in this week with things that I'm looking at more on an intermediate term than something that's going to happen this week. So, when it comes to the yen, the conflicting part of it is I really believe in the correlation of US dollar yen and interest rates. And I had a great week after the NFP number, after this day, because this day was on that very weak NFP 200,000 job growth number when they were looking for over a million. And at that point, I thought we were going to rally to new highs and take out the prior high in yields. And to me, it's starting to look like we're rolling over here again in yields. And if we take out this low, we could be looking at 130, 125 on the 10-year, which isn't exactly bullish yen, which US dollar yen is a pretty good proxy for what yields are doing. So yields look like they may be rolling over for a pullback. The breakout, when you think about this move, it's from 0.50 to 175, so 120 bips. Why can't we pull back 50 bips from here, which would give you this 120 level? And that's where the acceleration really started to take place at 120. So right now I'm looking for lower yields. Okay, so lower yields should be constructive for everything, right? It's not supportive of the dollar. Lower yields make it uh, not as competitive for opportunity loss like in the precious metals. When yields were going up, we had a break in the metals. And when yields started to taper off, the metals got a pretty good bounce. So this is a very important chart to me, and this is a very important level to me, and it's going to indicate the next big move in interest rates. I don't think we're going back to the lows at 0.50, maybe in our lifetime. I know there's still some people talking about negative rates, but I think that's off the table with the huge move that we had. But this tells me not to be aggressive about buying US dollar yen. Everyone with me? Where do I get that information about longs in the dollar? Oh, Shraka, it's the DSI, Daily Sentiment Index. Have you heard of it? I think Jake Bernstein puts it out. So it's daily, so the numbers shift every day. Okay, it's a sentiment index. It's not a commitment of traders report. And I'm not sure of how he calculates it, but I pay attention to it. To me, it's important, especially when you get to levels like 90 and 10, which shows everyone on the same side of the boat. Okay, you're very welcome. So that's my take on yields. Uh, one of my best calls of the month, and May's coming to a close, was this three drive to a top Bitcoin call, right? I mean, this is the formation I teach, and I'm going to keep bringing it up. And you know what? If you learn one methodology and it works, and then you're patient just to wait for setups like this, one, confirmed high, two, a non-confirmation pullback, and then three, well under 70. This is what gave me a hint for the top. And then since we restarted TradeGate Hub, we had this rally up here, and I had this black line, called it the black line of death for Bitcoin, and I tried to hold it a few times. And back here, my target was based on the 200-day moving average, which at that time was around 36,000. We've overshot it. So, I'm not long crypto. It looks like it's trying to back and fill in here. I know some people that think that we could trade um, down towards 20. There is a decent little formation beginning to develop here. This spike, you could call this 1, 2, and 3, which implies there's another shot down in Bitcoin. So, I wouldn't be in a hurry. There's a lot of technical and fundamental damage. And, a lot of people that bought this spike last week thought it was going to be up, and away. And, it took courage to buy this. Okay. But, when you have this type of technical damage in a market, it takes time to repair it. So, I mean, here's a daily, and I said we should do some backing and filling. And if you want to be a long Bitcoin, I would wait for it to prove itself back to the upside, back around 40 to 42,000. Back above that level, I think you have a chance, because, I'm not a bear looking for the end of Bitcoin. I actually think that wherever we base, that we could see new highs. I've seen some, you guys know I interview a lot of people. So a lot of my ideas are not original. A lot the three driving stuff isn't original either. I learned that from J.R. Hill in the 70s. But I know some pretty good analysts that were bullish Bitcoin at 3,000 a year and a half ago, that were looking for this break, and then after this break happens, they have targets like up at 80,000. So I don't think this is the end of crypto, even though China's trying to end it. I don't think it's the end. So, I keep an eye on this and just be patient and wait for Bitcoin to prove itself. But this was one of the better calls that I had um, over the last month, was the short side of that. Um, Taking a look at precious metals here, gold has this breakout at 1860. And, gold should start to make some progress if we get some more downside in the mark, in the dollar. But we are starting to diverge on multiple time frames in the gold. Um, and I know it's exciting, but, this is 50%. Maybe it's got 61.8. I just want to show you it's based upon these fibs are based upon the high of the move that we had in August of 2020, and then the lows that we had down here. So, we're trading right around the 50% level. This may be it. So I'm actually, it's my belief, a little different than a lot of the gold bulls that are looking for new highs in gold, that we could get some type of top here. And before I look to get long gold, I think we could see it back at 1600 one more time. So I'm actually looking for reasons to sell it. And I don't have anything like that yet, but I'm paying attention to the fact that the RSI is not confirming. It didn't confirm on this high. See this? And we haven't made a new high. It could happen this week. So I'm going to be on the lookout for potential shorts. Last week, silver was a weak sister. Look how much further away it is from new highs here. and it peaked at the 78.6 level right here, and we're holding this 27.10 level. And I talked about 27.10 here. We took it out and then closed above it. But see this low? We're pretty close to 27.18. I think 27.10 is going to be big, and it's going to be interesting to see what happens at new highs. It's my bet that silver does not make new highs with gold, that we get some type of failing rally in silver. And I'll tell you where I'm going to be looking to back up the truck and load up in silver is going to be back in here, back at these lows. So I know it's a contrarian call up here. It look, especially, like I interviewed Patrick last week, who's looking for triple digit silver. But I'm looking for one more flush. Probably happens when the market peaks in the next several weeks, and one more decline in silver back towards these lows, and then I'd be long silver for a pretty big move. Okay, so that's my look in the precious metals and interest rates. Aussie still continues to underperform, even though we have a weak dollar. A lot of people long Euro Aussie. I mean, we're way under last week's highs in the Aussie. I had a short recommendation here last week when I talked about the comparative rallies between what was happening in the commodity currencies compared to Euro, which was attacking highs, and cable before it made the third drive to new highs. So still dollar weakness, which translates into a blow off in the S&Ps, which translates into stronger commodity prices for a while, and looking for the potential of one more high in gold. And if you want to be conservative, you just wait for closes back under this channel line at 1860. All right, so we're 20 bucks above it. Also, pay attention to what happens midweek. We could have some inflection points midweek. I am a believer in turnaround Tuesdays, but especially when we have something like an eclipse happening midweek. So there could be some turns. You don't know how long lasting they're going to be, but I'm thinking there's some fades going into the middle of the week. And want to remind everyone that if you're watching on YouTube, to come and register for TradeGate Hub to share your ideas and post your charts, and also to register for the conversation I'm going to have with the author of Market Wizards at 1 p.m. EST on Wednesday. It's always insightful and an honor to talk to Jack Schwager. I think this could be about the fifth interview with Jack, and we're going to be talking about his body of work and characteristics that he has seen from all the great traders that he's interviewed over the years. So make sure you're here. If you're here live, I'll try and get some of your questions into Jack. And with that, I want to wish everyone a great day, a good week to come. And most of all, don't just count your pips, count your blessings. And I'll see everyone for Turnaround Tuesday tomorrow. Adios.